I actually convinced my parents to pull a HELOC on their house. And then I put 10,000 down, which is the requirement for the wholesaler that we went through. And then they paid for the rest out of their HELOC. And then I paid for the renovations with the remaining $15,000 I had left over. As much as I did all the work, I realized that I didn't like it. Not only did I not like it, I hated it. I tend to be overly optimistic about things that I can do, like, oh, that's going to suck, but I can do it. But then when you're actually in it, it really sucks. When you're dealing with contractors, you've got three things to choose from. You've got quality, price, and timeline, and you can't have all three. The opportunity I see is being able to come in and leverage mentors that I've connected with through this business buying community that are kind of going to teach me how to go from just a regular old business to optimizing everything, increasing revenue, and then ultimately bolting on other businesses to it or an exit like a sale.
Welcome to the Kaizen Blueprint, the podcast dedicated to helping you achieve a better life through continuous improvement. If you're ready to elevate your finances, grow your investments, and unlock your full potential, you're in the right place. Each episode brings expert insights on personal development, finance, and real estate, giving you the tools to build lasting success. Now, let's dive into today's episode. Kyle, how you doing, brother? Welcome to the show.
I'm doing awesome. How are you?
Good. So I know you, we met at Sheik's Freaks, and we could dive in a little deeper on what is Sheik's Freak and how that, can be beneficial for the younger crowd. But I know you based on our previous call, you were in real estate, you were doing a house hack of some sort. And then currently you're in kind of a construction business, more like in the land, but tell us more about where you are now and how'd you get started into the real estate game?
So right now, my full-time job is I'm a project engineer for a construction company here in Colorado. We build bridges and dams and roads and all kinds of stuff. It's really cool. I've been doing that straight out of high school. But I guess in terms of getting started, I think when I was 18, like a lot of people, I read Rich Dad, Poor Dad. Somebody in my family recommended it to me. And I just instantly was obsessed about personal finance, buying assets, everything along those lines. And I probably spent a solid year. I drove a lot for work, and it was just podcasts and audiobooks and stuff like that, just to try and learn about it. So that's kind of what sparked my interest. I've always loved money. Like even as a kid, I tried to have a lemonade stand at one point.
Wow.
When I was 18, I tried drop shipping like every other wannabe entrepreneur. But ultimately, I fell in love with real estate pretty quickly out of high school. And then, like I said, after that learning period, saved up quite a bit of money, probably 25 grand, which is a lot for an 18-year-old. And then I jumped into my first fix and flip. And then quickly after that, I bought a house hack. So that's kind of the start of my journey, I guess.
So how did you, let's dive a little deeper on how you acquired that fix and flip, especially without any experience.
So I guess I come from a background of I have a really hardworking family. My parents, my dad, my aunt and uncle, even my grandparents, they all kind of did a couple flips together when I was a kid. So they're very handy, very knowledgeable. And like I said, I didn't have any interest in it for a while, but it also kind of gave me the confidence when I jumped in that I'd have some sort of resources to bounce back on, along with my experience in construction and just like hard work in general. But yeah, I saved up, like I said, about $25,000. And then I bought a condo in Aurora, Colorado from a wholesaler. And It was in like the worst condo complex you could find in Aurora. Like it was cheap, but I bought it during a really good time when the market was appreciating quickly because of COVID and all the money printing going on. So I financed it I actually convinced my parents to pull a HELOC on their house. And then I put 10,000 down, which is the requirement for the wholesaler that we went through. And then they paid for the rest out of their HELOC. And then I paid for the renovations with the remaining $15,000 I had left over. And then there's another like $5 grand that I put on a zero interest credit card. So that's kind of how I did it.
So you bought it from a wholesaler, then you had your parents do a HELOC, and that HELOC is basically paid from the property itself, and then the remainder of the money that you saved up, you use it on a construction.
Correct. This was kind of all talked about up front with them in terms of the plan. I stayed close to my budget. I went just a little bit over. But yeah, that was the deal. I put up the front and the work, the physical
Okay.
work as well.
Yeah, that's good. I feel like as the younger folks nowadays, we're so bogged down into like the technology and forget that, we have our own hands to do stuff. But it's great that you have that kind of community behind you, the environment with your family, building that construction business and especially your own construction business experience. And to do that. Now, was that difficult for you or was it easier given that you had that experience and backup? Did you experience any hardship during that experience and process?
I guess ultimately the actual work, it wasn't super difficult except for like one part. I hated the drywall part and it took me forever. But I guess in terms of the help from family, it's awesome and it's given me confidence because family's very supportive.
So with your family background and then that kind of helped you, it felt a little easy, but then did you experience anything, you mentioned about the drywall part that might be a little difficult for you.
Yeah, so I guess having the background that I had, it was easy. It only took me to like 6 weeks start to finish. It was kind of just a cosmetic flip.
All right. So you were talking about the construction aspect. What more did you had hardships on in that regards?
Well, it was not in a safe place. Like I said, it was kind of the worst condo complex in Aurora. And actually, towards the end of the project, there was a shooting on like the front step of the condo.
Wow.
And that was a little bit scary. It was like the only night that week that I didn't actually stay the night there. And I showed up the next morning and there was caution tape around like just my balcony or like my front porch. So that was a little bit hard. Ultimately, I was just worried about reselling at that point because wasn't sure anybody wanted to buy a condo in
Yeah.
a not safe place, but I didn't have
Got
any
it.
problems with that.
Yeah. So the good thing is that you got started, right? A lot of people, especially in real estate, they are in this paralysis analysis mode, right? They probably go to their first meetup and or other mastermind group, quasi mastermind group, and they learn that you can make a lot of money on real estate. However, they don't realize the amount of work that goes behind closed doors of, a potential shooting outside your home or that you realize drywall is really, really difficult. So all that stuff, it seems like, one, you had the community and the background to do so. You pulled the trigger on it. You created that deal, right? You found a deal from wholesaler. You financed it from your parents' HELOC, and then you did all the construction work all by yourself and successfully sold the fix and flip. What do you think kind of deter people from taking that first step in their first real estate deal?
Probably not willing to lose their money, or you don't know what you don't know is what I hear from a lot of people. Like I said, I kind of had confidence because of my background, but there's a lot of people that get into real estate that maybe don't have that confidence to do a fix and flip by themselves or go raise money, I guess. So that's probably one of the bigger problems people run into. I also wanted to bring up the fact that I guess another hard lesson I learned was as much as I did all the work, I realized that I didn't like it. Like I not only did I not like it, I hated it. And so that's something that people don't think about. Like I tend to be overly optimistic about things that I can do like, oh, that's going to suck, but I can do it. But then when you're actually in it, it really sucks. Whether that's doing the work or some people don't like analyzing deals. So I guess a lesson learned there is maybe figure out what you like, what you don't like, and then kind of weigh that against yourself and say, hey, is this really going to be worth it? Or how can I leverage somebody else, like a partner, to fill in that gap there?
So what have you realized from that experience? What were your strengths and weaknesses are?
So ultimately, I'm strong in terms of like, I'm willing to put in lots of work. The problem is I was telling you kind of pre-call here. I have ADHD and that really ultimately that's kind of why I didn't like doing drywall and like a lot of tedious things was because my brain just it sounds crazy but it just doesn't work that way and
Hmm.
everything that's really tedious takes me 4 times longer than it would take somebody else who is not in the same situation as me, you know?
Got it. So you realize that perhaps the work that you're doing might take a little bit more time because of that ADHD, as opposed to someone who have that specialty and can be focused at one thing at a time, can excel in that one thing and propel them for success.
Yes. So I guess I just have to figure out, and I've been working to figure out how to overcome that and, avoid things that I know I'm really, really going to struggle with, along with also trying to get better and manage my weaknesses and, you know, grow into them. So I guess ultimately I learned a lot of hard lessons, but then fast forward a little while, I took the money that I made from that flip and I rolled it into a house hack, which was awesome. It's like a mile from where I've lived my entire life. It was an okay deal, but I screwed up because I learned my lesson, but I
Hmm.
didn't change my actions. And I bought a house that needed a lot of work. And ultimately, that work has taken me about a year and a half longer than I thought it was going to take.
Wow.
I bought this house with intentions of turning it into a unofficial duplex, and this was 2 years ago. And I am just now at the age of 22 wrapping up this project that I thought was going to be done a year and a half ago. So learned a lesson, but I guess I didn't learn it hard enough. So I've had a rough couple years.
Yeah, well, it's good though that you're taking this risk early on and learning all the lessons, even though maybe in the first deal you didn't really learn much and transition into the second deal. But that's okay, right? It's okay to take that risk, and it might take you two or three deals to finally realize what your mistakes are and finally realize that okay, I need to stop doing this because it's going to lead me to that, just based on the historical facts. I mean, in my own personal story, when I did my first fix and flip, it was similar case with yours. I just didn't have, I didn't really have the construction background, nor kind of my parents didn't want to be involved in real estate. I had to went to a meetup and then network with a lot of people, and that's how I first found my private lender, who is still a friend to me today. But during that entire process, I realized what my strengths and weaknesses are, and that is like, I like analyzing deals, but I don't like doing much of the construction process. And I remember that I thought the deal was going to cost me 40,000 in rehab costs, and that 40,000 come from a general contractor who I thought that was trustworthy, and ended up costing way more than that. And the same general contractor left the site, left the whole job site. It's too small for him apparently. So I learned my lessons there, right? Just, you want to trust but verify. You don't want to have just anybody, you want to confirm that the numbers are correct, not just because he have this title of a construction person that everything is correct and that's the number you should go for.
It,
Another
it's
one would
funny.
be,
It's funny how you bring that up. I think you and I are very similar in
yeah,
terms of like I'm good at math. I like numbers. Analyzing deals and spreadsheets is cool to me. But I had the same thing happen with a general contractor. I hired him to add a bathroom to my basement, and fortunately, he did 70% of the work. But then he
okay.
took my money and walked out, and I had to take him to small claims court. So that's
Yeah.
another whole thing that we could get into later. But you do have to be very careful when vetting contractors because they know that they're in high demand and some of them will take advantage of you if they can.
Yeah, 100%. And it all comes from our age, right? When I first started in real estate, I was 18 years old. I don't know when you got your first deal, but we were both young. That's an obvious fact. And these construction guys usually are older guys with more experience and much more technical knowledge than we do. We're looking at it from just a financial standpoint. How much does it cost? Can I repair it? Can I sell it at a certain price? Can I make my profit margin? We don't look at, what's the building codes for this and what's the proper right way to do certain this, right? We only can see that from either Home Depot videos or like a book that we read on house flipping. And that's the facts that we looked at. They looked at as a hands-on experience, what they have done in the past. And they could use that as an advantage because us young folks might not have the experience and knowledge to do that. But you compromise that by finding out other bits, right? You're reaching out to other construction people that you may know in your network, or from like a local real estate group that you ask, hey, how much does this thing cost? How long does it take? And then see if you could push that to the contractors, and hopefully that they do it right. But you want to also verify that everything is correct, not there's no cracks on the walls, there's no leakage, there's no water coming in, things like that. It's pretty obvious, but we tend to forget some things like that because we're so chased into how much money that we can make or how much of the expenses that we can squeeze in.
Yeah, I think it was probably in a Bigger Pockets podcast. I heard like when you're dealing with contractors, you've got three things to choose from. You've got quality, price, and timeline, and you can't have all three. You've got to pick two of them. So
Yeah.
I mean, ultimately, just have to figure out what you're willing to forego. And at least for me, I wanted to get this project done quick. So I chose price and time, and I think quality was sacrificed there, unfortunately. But in some cases, it's not the end of the world, you know.
Yeah, yeah, 100%. So you mentioned earlier that you kind of hated real estate. Can you tell us why?
I like real estate as an investment, but I also have kind of hated it. Like I foreshadowed, this house that I own now, it's just been a nightmare between like permitting. I'm finishing the basement, and that's how I'm turning it into the unofficial duplex. Between permitting and the town has made it miserable for me. Costs kind of going up. Stupid things like this house, I've had to replace the dishwasher, I think 3 times. And I think every time it's happened, it's been like a Friday night or a Saturday morning when I thought I was going to be doing something else fun. So ultimately, I kind of knew that risk going in, but that's part of the reason I don't like it. And then, you know, the other thing that kind of has happened in my life is I stumbled into the idea of buying businesses. And since then, not that I don't like real estate, but the opportunity of buying businesses has been so exciting to me that real estate just became, you know, less significant in my life. And then now it's turned into a drag because my goals have ultimately changed. You know, when I was 18, I thought I was going to retire at 22 through real estate. And when I realized that that wasn't feasible for me, I kind of started looking for something else. And so now I guess my goal is kind of to get more out of real estate till I make a bunch more money. And then ultimately, I want to get back into it a little bit more passively.
So how are you making a bunch of money? You mentioned, you're finishing up a duplex that you're doing, and then you want to buy more businesses. I feel like there's a gap in those timetables where you need to acquire more money to buy businesses.
Yeah, you do, but I guess you don't necessarily have to have a lot more money. It definitely mitigates your risk if you come to the table trying to buy a business with your own cash. But I've been to a conference and I've been a part of a couple groups where their main focus is buying businesses with little to no money down or with partners, creative finance, whatever it is. So I guess, yeah, that's the best answer to your question there.
Sure. So can you walk us through how to buy a business real quick?
Yeah, there's so many different ways to do it, but I guess I can walk you through what I intend to do
Sure.
as of now. So, I guess most people go through brokers. I think kind of the pros, the people that buy lots of businesses like Cody Sanchez or whoever, they get off market deal flow. And that's ultimately where you're going to find the best deals. But an everyday, you know, first time, second time buyers probably going to be looking at websites like Biz Buy Sell. That's kind of the most predominant one, and it takes a lot of digging, a lot of deal analysis, things like that to find something that's right. So I think a lot of the people that I've talked to tell you if you want to buy a business, you have to create, they call it a buy box, and basically looking at yourself and saying, okay, I'm skilled here. You know, for me, I've worked in construction all my life, so or since high school. So ultimately, I probably have to buy something that's construction related. It doesn't have to be the exact same as what I'm doing, but I have to make that box. And that box consists of, like I said, the industry, kind of a price point, and then a strategy. Most people buying businesses, especially when they start, want to buy something that is proven and is always or has a history of consistent growth. But then some of the pros or people who do it a lot, they look to basically fix and flip like real estate, but it's a business. Come in, buy something for pennies, and then 5, 10x their money in a couple of years. So that's kind of how you get started. Find a deal. And then I intend on putting money down, whether that's through a HELOC from the house I own, or I'm toying around with the idea of selling that house, and I'd have a little bit over $100,000 in cash walking away from closing that I could go all in on a business with. So I haven't fully decided how I'm going to do it, but it's what I'm thinking.
Got it. So, okay. So the first thing that you want to do is similar to real estate, right? But having that crystal clear criteria of what are you looking at? What are the industry that you're finding interesting or that you feel comfortable in? How much money are you willing to put in that business? And then what are your somewhat of an exit strategy or just strategy in general? It seems like what you're doing is more of a value add play where, you would look for a business, maybe they are at a risk from a financial standpoint that you want to shift that around and then build that cash flow for them through, various methods depending on the business, and then eventually leave or sell that business within a span of amount of time that requires to make it in real estate terms stabilize. Is that correct?
Yeah. So just to be clear, I have not bought a business yet, but you're kind of right on that strategy thing. Somebody like me going to buy a business is going to more than likely buy it from a burnt out owner, and they're going to take on basically a full time. It is likely to be a job until you get into those bigger businesses at, significantly higher price points where you can, actually buy a company and own it, just almost like buying stocks on a lot smaller scale. But for me, I'm going to be taking over a business from an owner who's probably either retired or just sick of what they're doing. They've built something great, but maybe they're kind of at that max. And the opportunity I see is being able to come in and leverage mentors that I've connected with through this business buying community that are kind of going to teach me how to, go from just a regular old business to optimizing everything, increasing revenue, and then ultimately, bolting on other businesses to it or an exit like a sale. So,
Got it. Makes sense. Now, most of our previous guests that we had on the show, some of them are really, really experts in their field and have a ton of experience. But it's really great to see someone like yourself who are actually in not the one before. It's not actually in the works, but in the process of going up. Right, you're in that business buying community. You're learning new things constantly. You have a full time job and you're kind of transitioning from the real estate aspect to sell or refi on a home or take a HELOC to pursue that business. Let's go into that first step, right? Finding your crystal clear criteria. Is there specific industry that you want to be in based on your background or just based out of interest that you're looking into?
yeah, specifically, I've had to put a lot of thought into this. I'm looking for a business that is probably something that's a subcontractor to a general contractor. So, like I said, I work for GC
Sure.
and we hire out a lot of things like erosion control or like fencing companies. What are some other examples that we like drilling, instrumentation on dams, things like that. So, I don't want to buy the GC. I want to buy one of those companies that, especially like an erosion control company, it's becoming huge, especially in Colorado. There's a lot of regulations and GCs have to stay in compliance. So they hire companies like this to make sure they stay in compliance. So that's growing largely, but it still focuses on just one specific task. And you can get really good at it and ultimately scale the company as fast as you can find good employees, which at least in this industry tends to be like the roof there is how many good employees you can keep.
Hmm. And let's assume that you found this business, right? Creating a scenario here for the help of our listeners and obviously for the help of you as well. That let's say you are finding that soil erosion or kind of environmental related site related business or subcontractor, right? You're not buying a GC because they're more established, they have money and things like that. They probably are expensive to sell. So you're looking at the subcontractors who are probably looking to grow. How are you buying the business? And what I mean is, let's say you have the funds for it, you buy the business. Now, are you running it as an operator in that instance? Are you working in the business in that instance?
Yes. Depending on the deal we buy, but like I said, my price point is probably definitely under $1 million purchase price, probably under $500,000 purchase price. And anything you find at that level is going to be small enough to where the owner really is working full time in the business. So,
Hmm.
and they kind of wear a lot of hats. So it'll be a lot of work, a huge learning curve, but I will definitely have to be involved full time in it to ensure things go. And I think that's good to start. Like it'd be weird for a 22-year-old to be able to just go out, buy $1 million company and not have to run it. Like I want to be able to run it. I need to know that, or I want to learn that skill of management. So that's the only way to do it, I think.
Got it. What are some several attributes from a business buying person to be successful?
Obviously, they're going to have to put in a lot of hard work. I think, not having done it, there's a lot of unknown here, but I think being open minded, and especially as a new person coming into an established company, you have to be willing to listen to your employees because ultimately they're the ones who still run the company. And they're also your biggest risk when it comes to purchasing a company. If they don't like you and they quit, you just
Sure.
spent a lot of money to build a company from scratch again. And that is definitely scary. And that's the biggest risk when it comes to doing something like this.
Got it. And when you're in communities, right? You're in communities of business buying. I'm pretty sure you have some mentors. What are some businesses that people don't usually acquire or not of interest? Not from a financial standpoint, right? You don't want to buy a business that are negative cash flow. Maybe you will, depending on your risk. But in terms of industry and or maybe where the business is at, like startups or maybe quasi startups where they've been at it for 2 years, or specific industries that people are staying away from.
Yeah, so people typically don't buy startups. That's more of a venture capital kind of thing
Hmm.
where you give them money in hopes that they're successful. But most people tend to not buy restaurants. They're extremely risky, and
Interesting.
they don't seem to make a lot of money. And then another thing, I don't know why. I've heard a lot of success stories on liquor stores, but if you scroll through Biz by Sell, I think there you will see more liquor stores than anything else. I really don't know why, but people seem to want to stay away from them. Other than that, yeah, no specific industry because that's more on the buyer to decide. Everybody's got skills in everything.
Sure. What about when you're what about restaurants? And you were speaking about restaurants earlier. What about franchises? Is that something like I have a friend actually right now that I talk to. He's shutting down his garage door business, which is and the reason why he started is because it was a franchise, a franchise garage door business that he bought or took ownership of, or some sort of like had a franchise license or something like that. I'm not really sure how it goes in a business buying world, but he owned it for I guess a few months or to maybe a year, realized that it's not for him. Is that something that you would like to take a look at, or other people in a business buying sector in terms of just franchising in general?
Yeah, it's actually something that I did look at. One of my mentors who is kind of willing to be an investor on this, whatever business I want to buy, he really liked the idea of a franchise, especially being young like you and I. I'm super big on leverage and not just money wise. The fact that you can leverage somebody else's experience, you can take a franchise's 20 years of experience and they're going to try and teach you it in like, a couple weeks or a couple months. So you can go out and start or open a new location for them. I think that's really cool. That being said, franchises typically don't tend to have returns like private or individual businesses do, just because you've got that owner over your head that takes what percent, whatever percent of your profits every year or every quarter. But it's a really good way to start. And I haven't fully ruled that option out yet for those reasons. It's basically you pay that franchise fee, but they're going to teach you and vet you. So it definitely de-risks situation there for especially a new wannabe operator.
Got it. It makes sense. So franchises take away a lot of the kind of the bottom line, right? The profits, because of the fact you got to pay franchises fee, license fee, whatever fees that goes into it. I want to
But
go
they
back
also do
into.
the
Go
sorry,
ahead.
one more thing. They also do the research for you. Like they're not going to let you open a Chick-fil-A in a dying town, which sounds obvious, but they know so much more about the metrics that than just some, you know, incoming wannabe operator knows, which de-risks it as well. Sorry to cut
That's
you
a
off.
No, you're good. That's a really good point because what if let's say you, right, Kyle, you're just starting out as a business buying owner, looking to buy a business. Does it make sense? You have a mentor and you have a community backing you, but what if you don't, right? What if you maybe heard a Cody Sanchez podcast and we're like, okay, this business buying thing, I think it might work, I think it might not, but I want to take a risk and I want to jump in. Does it make sense for someone to be in a business buying kind of world to start into the franchise first because it's a little bit more established? I think the friend that I was mentioning about, he got into it because he got into the business buying a franchise with the hope of you already have like a scalable process, you already have a systems in place for you to start building up that business and take that experience into maybe in the private sector where he could buy his own business outside of the franchise. So in turn, my question is, does it make sense for someone who just got started, depending on what experience and level they are or previous industries that been in, does it make sense for them in the business buying kind of stage to do franchise first and then move into the private sector to get that experience?
Yes, I think it totally does. It's a great option, like I said, just to de-risk. So ultimately the person would have to, figure out where their risk tolerance is. And, you know, me being single, no kids, my risk tolerance is a little bit higher. Whereas, like you said, somebody who just watched a Cody Sanchez video and wants to hop into this, but maybe can't take that risk. It's I think it's an incredible way to get started and learn. I think I mentioned, but your biggest asset when you come into a business is the skill set that you have. So if you can pick up just a management skill set from running a franchise for a couple years, you know how to manage, 10 people. You're going to be a lot more confident when you want to go buy that individual company. You know that you know how to run, a crew of people doing whatever it is. That'll give you the confidence. And to me, it sounds like just from talking to people who have bought businesses, that confidence translates either positively or negatively into the business once you start to buy it or once you
Got it.
do buy it.
Got it. And in terms of, you mentioned about management skills. What are some skills or books that you have read or have learned from other people, not directly from reading a book, perhaps from a podcast? What have you realized in a management skill set, soft skills that require to become a successful operator?
So I guess I read when I first learned about buying businesses, I met this successful business owner. He's kind of been a mentor to me. Together we read this book called Buy Then Build, and it's probably the number one book in M&A that people read when they start out. Lots that's kind of just a basic overview of like why you would buy a business. It doesn't get too much into the skill set, but from talking to, like I mentioned, I've got probably three main, I couldn't call them full time mentors yet, but they've been very mentor like for me. And I guess they haven't taught me quite the skill side of it yet, but they've been very helpful in terms of like deal analysis. I, last summer, I got fairly close to committing to buying a business and I took it to two of these mentors, both of which run very successful companies. One of them runs like a holding company with, I think he's bought seven businesses in the last couple of years. So very intelligent people. And I took this deal to them. It was a deck building company. And they were both like, no. And I was like dead set on this thing. I loved it. And they shut it down. 6 months later, I kind of realized why they shut it down. But that was a very, just having those people kind of helped. They showed me what was wrong with the company And now I'm not going to make that mistake again. I'll stop wasting my time on something that has red flags like that business.
So, without going into specific details, what were some of those red flags and what were some of those kind of foreshadowed problem that your mentor saw when you pitched a deal?
The biggest one was I took the owner's, like the seller's word a little bit too I wasn't quite as careful when I was talking to him. So he thought that his EBITDA or SDE was $250,000 a year. And I was just like,
Before you dive into it, what is EBITDA for the people who are listening, and what is SDE?
so EBITDA and SDE, they're kind of interchangeable. SDE is typically used for a smaller, like owner run company, but SDE stands for seller's discretionary earnings, which is basically the amount of money that a business owner walks away with at the end of the year. And EBITDA stands for earnings before interest, taxes, depreciation, amortization, which I think one of my mentors put it as just a fancy word that factors out all of the noise in a business's income statement to tell a buyer what you're actually going to walk away with at the end of the year if you buy a company or buy that specific company. So yeah, that's kind of what that means, and it's something that you have to be really careful with doing your due diligence when you're seriously looking at a company. Because, like I said, this one that I looked at, the guy thought he made $250,000 a year, and it turns out, like when you look at his financials, he did it one year, and then the second year he made like 20,000 in SDE. So you can't really take that for granted. That was the biggest red flag of the company, is it wasn't consistent. And then also he didn't know any of the important metrics of a company. He didn't know his average like purchase price, or it was a general contractor ish. So he didn't know the average price of one of his jobs. He didn't really have any idea what he was paying for materials and labor. It was just inconsistently run. And that was ultimately the problem.
So, what I mean, when you're buying a business or real estate deals, right? When you want to buy it at a right price, there's usually problems that come about and kind of rises up when you're doing that due diligence and into a deal. In this instance, well, let's begin first. Like, how did you find this deal?
I found it off market actually, which
Interesting.
is pretty hard. Not pretty hard. It's everybody looking for a business wants an off market deal.
So,
So
is it real estate?
yeah, exactly. It's the same thing. Same thing as real estate. The best deals are off market. The scary thing about that is you don't have a broker or anybody else to kind of vet that business before you look at it. So it's definitely a little riskier. And going off market, you definitely want to pay for a quality of earnings report and just do a lot of diligence when you're looking at it. So, but yeah, I found it. I set up a LinkedIn, basically a campaign reaching out to business owners, and I had a lot of success with it. But a lot of that success was I got a lot of like small business owners, businesses that were even a little bit smaller than I was looking for, where the owner had like a very specific skill that wasn't going to be transferable to somebody not in the industry. But yeah, I got a lot of good leads from LinkedIn.
Got it. So you got it from LinkedIn, and then someone reached out to you, a business owner. It seems like it's in your buy box. So you did your own analysis on it. You found some inconsistency on it, and then your mentor say to back away. Now, let's switch up the scenario here, right? And let's say that the business it is looking good, pretty consistent. Walk us through what happens after you found a deal. And now that this is, you mentioned it was off market, do you provide a price then based on the financials, like the purchase price, or do they provide the purchase price? And how does that go after that process?
There's no set process, especially when it comes to that. He came up with a price first, and that tends to be where the problem is because business owners will Google like what's a what's a good selling multiple for my business that makes X amount per year. And they're going to think, oh, my business at this revenue sells for, or at this profit sells for a four times multiple. And ultimately, because they're not in the acquisition space, they're in the business space. They don't understand that there's so many more factors that go into a selling multiple. So, and typically that multiple is based off of risk. So, this business was a lot riskier. So, in turn, the multiple should have been a lot lower than he was asking. But, it's really hard to change people's minds. So he wasn't really willing to budge too much on his multiple or on his purchase price, and ultimately that's what happens with a lot of these deals is they get like, holy cow, I could sell my business for $1 million. And no, everybody will tell you your business isn't worth it, but sometimes they're just not going to believe you, because you're the buyer.
Yeah. I come from a real estate industry and you as well. It seems like a lot of this relates back to real estate, right? You find deals, whether that's off market or buy, bid, sell or MLS. And then you do kind of a negotiation with the seller. And obviously that could be verbal, contractual, doesn't really matter. And then you go into that due diligence process when you look through the financial, especially in a commercial world, you look through the financials, you make sure that the numbers make sense, the cash flow makes sense, right? We could say EBITDA or SDE, or we could just say NOI, right? That's no
Yep.
difference. It's basically the bottom line. How much are you making? How much can you before you pay any debts or before you pay yourself, like how much money are you making? Then we do. I believe in commercial real estate, it's called cap rate, but it seems like from your guys' perspective, it's a multiple, and then that is like the price based on assumptions that both parties may or may not agree upon. And if it doesn't, then no deal, or let's come back until someone changes their mind. And if go through, then we go through the legal procedure of acquiring those business. And once we got it, it depends what our strategies are. Most likely it's value add, whatever that means, whether that's raising the rents or creating more, revenue. If you have a laundromat, you might have a vending machine to have some additional revenues for people who are waiting for their laundry or washer or dryer or things like that. And then that's it. Like you build it up and then you either dispose of it or you sell it, refinance it, whatever, and you make money. Is that usually the typical process of the business buying?
Yeah. I think you're really intelligent in pointing that out. A lot of the metrics are the same because ultimately each one is an investment and investors look for the same stuff. Yeah, I think the connection there between cap rate and selling multiple is it's exactly the same thing, just different terminology almost. But I think that real estate investors in the future and now are starting to hop more into business acquisitions. Just, a lot of people have popularized it, but I think they see a lot of opportunity there. And that skill set is semi transferable from one space to the other, which is really cool to me.
Why is that? I have noticed that trend. Before this recording, I actually talked with someone who's looking to sell some of their real estate portfolio, not all. He's still into real estate, and then diversifying into a business buying strategy. And his methodology was he's kind of an older, experienced age. One third of his business is it, or one third of his net worth is in stocks or equities, crypto. One third is in real estate, and one third is actually what he's building now in a business acquisition standpoint. But why do you see a trend like that from real estate investors? Maybe they cash out and then, right, with their interest and things like that, they cash out and then now they're transitioning into business buying as opposed to sticking it out to either real estate or stocks.
Well, you're right. There is a trend. I think a lot of the business people that I've met or acquisitions people I've met through bigger pockets, which is funny because that's real estate. But I think the reason is there's a lot of buzz going around it right now with like Cody Sanchez being popular. And then like at the deeper level, you've got Alex Hormozy that this is kind of his strategy and everybody knows that he's worth $100 million plus. I think so. Yeah, I think real estate investors see that and they're like, whoa, it's almost a shiny object, which is great. But I also think people are a little too optimistic because it is different from real estate investing. But on the other hand, you've got a ton of different ways to invest in businesses the same way. You've got a ton of different ways to invest in real estate. So ultimately, the real estate people that are coming to be operators, I think a lot of them are going to realize that's maybe not for them because that's not what real estate is, a full-time operations job. But
Hmm.
I think a lot of the real estate investors that are cashing out are trying to put their money into, or, like give their money to private equity firms that are raising capital to buy, analyze deals and buy businesses, which is they've got an awesome, business model there. But yeah, I think because there's so many different ways you can invest in businesses, real estate investors are coming into that.
Yeah. I see it too from a market standpoint, like economic market, right? You see nowadays, at least I'm from Philly, and you've seen a lot of wholesalers in Philly, and eventually they start cutting down or start regulating this wholesaling aspect. Now it requires a wholesaling license, and there's a lot of strict commitments that you need to do and to get that. And there are requirements when you wholesale property in Philly. So you're taking away the competitors in a wholesaling side in that regards. And how is this related to what we're talking about? Is because just regulatory and real estate, right? The market conditions within real estate where interest rates are still relatively high compared to 2 or 3 years ago. And deals doesn't pencil at all. And what I mean by pencil is just it doesn't cash flow anymore depending on the revenue. Because you see, especially rent growth has been somewhat stagnant or lower because a lot of buildings are being built or are finished building now that there's not a lot of demand. And let alone when you're having, in business, right, you have the revenues. In real estate, you have rents or market rents and then vacancy and other income, things like that. That is going to drop down a little bit because they are lowering the rents. Rent growth starting it's not growing anymore. Actually, it's the opposite. And then expenses are going up, insurance going up, taxes going up, everything is going up. So in turns, you see that cash flow is kind of turned sideways or the opposite direction where you don't want to go. It's going red or bearish or whatever you call it. In the business buying strategy, you have full control of what you can add in terms of revenue, right? We mentioned earlier about the laundromat, you could add vending machines or ATMs to produce a little bit more revenue. In real estate, you can only hike up the rents, right? You can't just build an amenity out of nowhere because one, you don't have space, but then also, what other things can you do to increase rent other than just, vacancy or just the market condition? So you have no control there other than just increasing it or building more units to see where demand. And in terms of expenses, there are some creative way to lower it, but it's not, it's not feasible. Like you can't lower property taxes. You can't lower insurance. Maybe you can by finding other insurance brokers, but there isn't much difference. But, correct me if I'm wrong. Like I said, I'm from the real estate industry going into this business buying conversation with you, but correct me if I'm wrong, you have more control over the revenue and expenses when it comes to business, right? Perhaps give us like one business industry that you may have interest in and then see how can you tell us how you can take full control over the revenue and expenses in that regards?
Yeah, you can take full control if you come in with, like, if you buy the right deal, which is always the case. But you're right in comparing it to real estate. Like that was cool in 2020 to 2022, and now it is getting harder. And people like you are sticking it out, and people who maybe don't know as much are looking for the next cool thing. But I guess in terms of an example, and kind of the reason why I think business is really cool is, like you alluded to, if you compare like a business to buying an apartment complex, you've got a lot of the same metrics, same stuff there. But on one hand, this is how I see it: the apartment complex can only be 100 units or whatever it is, and you can only raise the rent so much, and you can only decrease your expenses so much. So there's kind of a cap there. Whereas business, and Alex Ramosi puts it way better than I will, but you ultimately there's no roof if you've got the right market, right location, whatever it is. Like, say you had an e-commerce business, once you find your metrics, like, I put X amount into ad spend, I get X amount out with revenue. There's not that I can only sell 100 units, because once you figure that out, now you can sell 10,000 units, and it just everything grows with it. So there's a lot less of a roof on business buying than real estate, I think,
Yeah,
or on
makes
business in
sense.
general.
Yeah, going to our final question about the business buying strategy here. If you were a new person, right? Obviously, you have a little bit of experience, but not yet in that business buying kind of execution of a deal yet. What about if someone who, let's say me, right? I'm a real estate person. Like you mentioned, there's been a growing trends from real estate people to business buying people. As someone who just started, maybe want to dabble in business buying, maybe I sold off my short term rentals, right? Didn't make sense to me anymore. I have a little bit of cash. Now I want to go into business buying because I seen a trend in maybe in Bigger Pockets or listening to Cody Sanchez podcast. What are some things that better prepare me to educate myself or just taking a dive deep into that building buying process?
The biggest thing for me is, and I think it goes over a lot of people's heads, but like I alluded to earlier, leveraging a network of people is probably the most powerful thing that you can do if you're trying to learn not just business buying, but especially like the best way to learn is to do it, and the second best way to learn is to talk to somebody who's done it. And that's what I feel I've done well at is I've got like I said, 3 people who are very either successful business owners or investors or both. And just being able to bring them, especially being young, people are willing to help you out a lot more.
Sure.
And it's just, I mean, for me, it's been absolutely huge to leverage their years of experience to kind of fast track my personal growth. I think that's what somebody that wants to buy a business or do anything needs to really figure out how to do is find a mentor or 2 or 3 and go from there.
Got it. So find a mentor, educate yourself, and then start doing it. And once you start doing it, you'll reach out to the same mentors who could help you out in whatever challenges or difficulties that you may have. All right, Kyle. So the name of the podcast is Kaizen Blueprint, right? Kaizen is a Japanese term for continuous improvement, and blueprint is obviously taking a step taking a thing to a step by step process and whatever that thing is. So the first thing that we're going to do is like play a little game. It's called the Kaizen Challenge, where you have about 1 minute, 30 seconds to 1 minute of to share 1% of like an improvement tip that you have, whether that's life, that's business. Imagine, someone listening and wants to level up their life and one small action they can take today. What would be that 1% improvement hack that you think that you have done to make somebody else better?
I think being able to actually identify what you seriously want in life and organize that in your head and then kind of come with a step-by-step plan to actually do it is honestly something I struggled with, but it's something that's significantly helped me take steps towards my goals and improvement. And finding a motivation behind that is also really what's going to drive you to keep yourself accountable.
Got it. Okay, very cool. So find something that you enjoy, execute on it, build a process behind it, and then have someone there to keep you accountable consistently. I think that's just a life blueprint in general, not just business. Good stuff. All right, game number 2. You're gonna choose a number between 1 to 4, and it's called Blueprint Roulette. So choose a number from 1 to 4, and I'll bring something up.
3.
Good stuff. So what this is similar to what was done before. So what's one daily or weekly habit that's had the biggest compounding effect of your life?
Ooh, honestly, staying active. It's something that I've not been super consistent with in the past, but when I work out every day, I my brain works better. I feel significantly better, and that is ultimately it gives me more motivation to be productive and do stuff. That's one. And then another thing is recently I just totally not totally, I stepped mostly off of social media. So I've got my phone limiting me to 5 minutes of Instagram reels per day and TikTok.
Wow, that's
Um,
ballsy.
yes, it is. And it can't even describe how much better I felt after doing that. I know it sounds cheesy, but just it at least for me, it destroys my attention span. And once again, it just sinks into my time that I should be spending, learning or doing. So that's been huge for me.
Yeah, 100%. I mean, you've done for 5 minutes. For me, it's actually 30 minutes per day. However, on a social media aspect, I delete my socials. I mean, it's just think Instagram and Facebook for the entire weekdays. And then on the weekends, because I'm in the real estate world and I like network with other individuals and running up my own podcast, turn it back on the weekends. So then I can get stay up to date with the market trends and the people that I love and the people that I admire and inspired by. So that is one thing. But it still have a kind of limit of 30 minutes per day. And that's all socials, not just Instagram. But 5 minutes, I mean, I don't know. It was it in TikTok, it's what, 10 seconds, maybe 30 seconds. So you got about five or 10 different
Yeah.
reels that you can only take a look at.
So why did you limit yourself? Did you kind of find yourself in the same trap of accidentally wasting time?
Yes, one thing that I realized, it was a huge distraction, as you mentioned earlier. Number two is that the comparison aspect was huge because you see on social media, it's all the perfect world of other people's lives, right? And once you realize that you don't see the hardship, especially, in the world of real estate, you know this, right? In HGTV, they show really, really nice house and there's no issues, right? But they don't talk about the GC that run away, right? Or the over budget that you come across to, or that you're trying to sell something and it's been days on market for a few months. Like they don't show that at all on Instagram. They may show it, but it's like as a story. It's like, yeah, I had struggle with this and then this how I overcome it. And this is like the result and buy my course. Right.
Yep.
But in reality, and I find it true too. Like real talk, the people who I've seen who are doing so much better in life, just in general, they don't post much on socials and they don't talk about it as much on shows. Like if they are truly enjoying their life and living the best life that they could possibly, whatever that means, they don't post it as much unless you're like some sort of influencer. But the regular people who post stuff that they're living their best life, you can find out from mutual friends that in reality, it's really not just like that. It's just what they portray to the world that their life is so perfect and it's much better than yours. And they have a lot of time and resources to post that online.
Yeah, I have very strong feelings about social media and how it is terrible for especially people under the age of 25 because your brain doesn't stop developing till you're 25. And I think just between attention span and like you were talking about comparing yourself to other people, setting standards that are unrealistic, I think it's horrible for kids. And I think the people who can manage it, not entirely stay off of it, but manage it are going to be a lot more successful in the long run. I've even seen some metrics that say like you once you lose your ability to keep an attention or to keep attention, you don't get that back. And that like terrified me because ultimately if you want to, most successful people have the ability to do focused work for a long, long period of time. And if you ruin that side of your brain, and if that's true that you can't get it back, you're in huge trouble. So it's
Yeah,
scary.
that attention span is huge. I've realized that I could focus more on certain things, and especially in where I am in the development real estate development world, it's a lot of contract focus for like work. Like I have to read contracts, like either a lease agreement or a contract with a contractor or things like that. Make sure that it's all buttoned up. The budgets is where we at, right? Financing agreements, like these are important things. Even one small mistake, even an extra comma or extra zero, that you lose your that awareness can go a long way, can have huge consequences if not done right. So I understand where you come from, and especially people see social media as addicting now, where you use that as some sort of what is it called? Like when you get away from something, it's like just when people are like, I don't want to.
Like an escape.
Yeah, exactly. It's like a escape for their life. It's like, I don't want to live my own life. So as a result, let me go through social media, make me feel like how a perfect life should be like through pictures, videos. And you just think about it that way, where in reality, you should take the action, right? What you mentioned earlier, figure out what you want to do, take actions, execute on it, build a process behind it, and eventually find someone who's accountable. And I think that's more important than just finding out those people who are already doing that and then make yourself feel like you're already doing that by looking at other pictures and videos.
Exactly. Yeah, it's a slippery slope, that's for sure.
Yeah, 100%. So, final game, and this is the final game here. This is called the 60-second blueprint. So, you mentioned earlier about the business buying process, right? But what is something in your life or business that you can create, that step-by-step process, whether that's to be successful, how to have a successful day, doesn't really matter. And if you could explain that in 60 seconds, what would that be?
Sorry, just to clarify, what's like
Anything. 60-second of a process that you're doing. You just got to explain it in 60 seconds,
ooh, um,
whether that's in business buying or just in general. Like we talk about business buying, right? We talk about how, at first you find what your criteria are, you buy it, then you value add in some from a way, and then you sell it. So right there, I just did like about 20 seconds. But in 60 seconds, outside of that, maybe in a smaller process of that, maybe a deal analysis, maybe just anything in general, you could do it in 60 seconds. Huge
okay,
challenge.
this is tough. So, I guess right now I'm really trying to learn how to be a good leader and manager. So, in my day-to-day life, every day I have to line out crews for context. So, in the morning on my drive to work, I come up with a plan for what we're going to do. I get to work. I then talk to each foreman, which is each leader, very specifically line by line, what we have to do today, what our goal is. And then I go back to the office and I kind of recap and see what I could have done better in terms of being a good leader for that morning or for the previous day. So maybe that wasn't a great answer, but it wasn't super step by step, I guess. But
No, it's good. I mean, in a management process, it's more of a productivity standpoint of staying organized, right? Of having someone, or you show up and then you take accountability of whoever is doing what work, and then eventually go back, manage it and confirm if those works are completed by the end of the day.
yes,
All
um,
right,
I have to be very self aware of what I'm doing at work, especially because I'm trying to learn how to be a good leader. So I guess that's
sure.
probably another step of the process there is step back and say, all right, what did I do wrong? What could I have
Yeah.
fixed?
Yeah. Yeah. Okay. Good stuff. This is a great episode. Kyle, I'm happy that you're being on it. We talk about a lot, right? We talk about business buying strategies, whereby we talk about how to find a business, transitioning out of real estate into that business buying and seeing the trend that's coming along to it. Now, where can people find more about you?
You, well, anybody could message me, text or call me. My number is 720-418-0133. You can also find me on Instagram. It's at Kyle, Sewczak, at Kyle Sewczak. That's about all.
All right. Sounds good. Well, Kyle, thank you so much for being on the show. And then we'll see you on the next one. Thank you so much for watching or listening to the Kaizen Blueprint podcast. If you got value from today's episode, be sure to like, subscribe, and leave a review. It really helps us grow and reach more listeners like you. And don't forget to stay connected. Subscribe to our newsletter at kaizenblueprint.com for exclusive insights, resources, and updates. Keep striving for growth, take action. And remember, small, consistent improvements create massive impact. See you on the next episode. Peace out.